Hi, and welcome to Market Conversations. Just want to do a quick video on Bed Bath & Beyond. It seems that I cannot stay away from these meme stocks. Every time I get into meme stock, I tend to lose money. Of course, I probably won't lose as much as I did back in 2021, but it's still a substantial amount. So Bed Bath & Beyond was down 35% today after they announced they were going to file Chapter 11 bankruptcy yesterday. If we take a quick look at this 9 months daily chart, the stock rallied back in February. So this was the time that I actually bought in. I bought in around $3 thinking that it would not go below that. But guess what? It did, reaching a low of 0.175. And the other day, it actually went up to 0.56. If we take a look at the news here, it says Bed Bath & Beyond decimated following bankruptcy filing. A technical analysis says while the company plans to begin its business, it's hoping to find a buyer. In the meantime, Bed Bath & Beyond plans to use approximately $240 million financing it received earlier this month to provide liquidity through the bankruptcy process. We will continue working diligently to maximize value for the benefits of all stakeholders, said the president. The other day when I did a video on Bed Bath & Beyond, there were under 63,000 members. Now we have over 63,000 members on Reddit. That means a lot of people are following Bed Bath & Beyond. And if you take a look down here, people are still buying the stock. And this person actually lost over $300,000 so far. Unrealized 207,000 shares. You can see there's just people posting and no one really knows what's going to happen in the next few days, few months. So all we can really do is be as patient as possible. You can see here this morning, Bed Bath & Beyond appointed Holly Edlin to serve as its chief restructuring officer of company.
Chapter 11 is not what most people think it means, or at least a very vocal minority. What is Chapter 11, or what can it be? A Chapter 11 bankruptcy will result in one of three outcomes for the debtor: reorganization, conversion to Chapter 7 bankruptcy, or dismissal. In order for a Chapter 11 debtor to reorganize, the debtor must file a plan of reorganization. In effect, the plan is a compromise between the major stakeholders in the case, including the debtor and its creditors. Most Chapter 11 cases aim to confirm a plan, but that may not always be possible. So essentially, if Bbby were to cease operations and liquidate, they could just file the Chapter 7. So why file Chapter 11 if you don't need the potential paths of a Chapter 11? Wouldn't it be much simpler and more logical? Yes, it would. So let's read that again. Reorganization, huh? That's right. They have to provide a reorganization plan that has to be approved and be in good faith. Chapter 11 does not have to mean liquidation and cease of operation. Okay, and if we take a look here, it says, remember the huge volume we had a week ago on bonds. And now read this. Throughout the duration of the reorganization, bondholders will stop receiving coupon payments or principal repayments. Furthermore, the company's bonds will also be downgraded to grade bonds, otherwise known as junk bonds. Since most investors are wary of buying junk bonds, investors that want to sell their bonds will need to do so at a substantial discounts. Junk bonds, huh? So why would Bbby buy back their own bonds if they knew they go into liquidation? Why buy something that can turn into shit if you know it will? That wouldn't even make sense if it was a decision malicious towards the shareholders or bondholders. Acquisitions as a means of restructuring firms and Chapter 11. So this user provided an example of Hertz. May 2020, Hertz filed for Chapter 11 as well. Stock drops about 80% immediately. Doesn't look good, I know. Keep looking. Little volatile movement during Chapter 11, and then October 30th, Hertz stock is suspended and delisted. That doesn't mean it disappeared from people's holdings. Present shareholders kept the shares, but trading wasn't possible, and people that didn't already own couldn't buy in. And then Chapter 11 proceedings went well, in fact, so well that relisted June 30th, 2021 at around $26 or around 1,450% the price of the listing. That's right. This is how things can go. Chapter 11 is not liquidation, panic, and bankruptcy just because MSM told you so.
The people that are still holding on to Bed Bath & Beyond, all we can do is just be patient. I'm currently holding on to some shares. I actually bought 10,000 shares to lower my cost average. So we can see here my cost average now is 51 cents. Before it was above $3. I'm already down over $3,000 on just my common shares. I have options which are down quite a bit as well. So you can see these are my positions here. And I actually lost $3,000 last week on some call options I had bought 2 months ago. So they expired worthless, lost money there. And if we take a look at the volume is very high today. And if you take a look at these call options, people are buying call options. 23,000 volume traded for the point. If we take a look at the January 2025 that expire a year and a half from now, they're only going for 13 cents. And you can see a lot of people are still buying these. So definitely be very cautious and buy only what you can afford to lose. I'm hoping Bed Bath & Beyond can be a turnaround story and we can all recover our money. Wishful thinking, but you never know. Let me know in the comments if you're still buying Bed Bath & Beyond, and thanks for watching.